Welcome to this episode of Stocks to Watch for November 27, which happens to be tomorrow. I have scouted six stocks out of the mid cap 400, and out of this six, you guys can probably look out to play out for the best A plus setup, which the market presents depending upon how the market opens tomorrow and how all of these stocks perform. Let's get on to the first stock, which happens to be Aarti Drugs. The reason why I've scouted and why I find this stock fine and tradable is, if you guys look at the current trend of Aarti stock, it is trading at a filtered demand and it happens to form up a small base as well. On the 1 hour time frame, you guys will be able to see that small base, and at the same time you guys will be able to see that it is trading at a filtered demand zone and it is forming up the base which we usually look out for. On top of that, I expect a or a smaller retracement to happen, maybe a move like this. Once that happens, this is where my entries are gonna be. So my entry will be somewhere around 465 to 468. My stop loss is 2 to 2.5%, and I'll be expecting not a move of 21%. This might take up a week or two. I cannot time the market and nobody can ever do that. But yes, I do expect 10 to 8% move. So basically a 1 is to 4 risk to reward. And on top of that, this can be a good swing. This might just take a couple of days to blow up depending upon the market scenario as well. If Nifty is not gonna perform good, and on top of that, if the pharma index is not gonna perform good, do not expect this stock to blow up or to show up an impulsive move. However, if they are static or consolidating, we might expect a better move here. So this is it for Aarti Drugs. From a setup perspective, you can risk 2%, and if you guys are willing to hold this for a little longer, or if you guys are able to play this out from the whole perspective, then you guys can easily chop out 21%. Yes. At the same time, remember this faking out or fade out structure. If you guys see and move from here, and if you guys do not want to book your gains here and then it come down to our break even, remember your stop loss is not gonna be here. Your stop loss is gonna be right at your break even, so that you do not lose out anything. And at the same time, you just end up at break even or cost to cost. This is very important. I see a lot of guys basically being like, oh no, I was up 1k or 2k, now I'm not gonna take that loss, rather I'll wait for my stop losses to get triggered. Boss, this is not how trading will work for you, and this is not how trading might just help you to move further with whatever you want to do in your life. So if you are here, you just need to understand that at times, and many a times, you will have to exit break even, and it's fine in doing that as long as you are able to scout up the right setups and play out the right setups in the right way. So this is it for the first stock. We'll move to the second stock, which happens to be Alkyl Amines. When it comes to this, again a smaller base, and the base is a little tight. If you guys see, this was a good order block where we had seen a good impulsive move from. You guys see how good the impulsive move was, followed by good retracement. So the trend overall was quite good. From the same area, we did see a small retracement. The retracement was not good, but if you guys see, this did not break the last low which it had made as well. So it is trying to consolidate here, building up, trying to build a small base here as well. So inside a base, you guys see there is a smaller base too, and on top of that, I just expect a little retracement. So by that little retracement, I just mean that I'll just wait for this area, and at the same time I'll enter, and I'll maybe wait for this kind of a move. If not that, stop loss is there. This might get triggered, and depending upon how the market plays out and how this plays out tomorrow as well, so we'll have to wait out for that. From a risk to reward perspective, I'll just be risking 1.5% here, because I'm not that sure about this setup. This is kind of a dicey setup and a tricky setup to play out as well. This is the reason why I am risking a little less. I do not want to basically prolong or increase my risk here, where I'm not that sure. So this might be like a B plus setup, not like an A plus or an A grade setup too. And the reward over here happens to be 7%. So you guys can probably enter somewhere around 2130 to 2140. And yes, you guys can wait for a day or two to show up the move. However, if it takes long and if it just keeps on consolidating here, is going to be more good, and you guys can easily expect our targets to get filled. The third stock is IGL, and if you look at IGL, you guys need to understand one thing quite well. I'll just try to make you guys understand what exactly do I expect here and what are the targets which I'm currently looking at. So if you guys are looking out for a good risk to reward setup, I wouldn't say the risk is good here. The risk is very minimal here. And you guys see how badly has all of the gas stocks fallen. Okay. So this gave a real bad move. It has a huge imbalance inside this move, and it's not necessary that you see, liquidity voids, fair value gaps, and imbalances in a, downward trading setup or whatever you call it. So as long as the stock is in a downtrend, you guys even need to understand that what is the reason behind the fall. So if you guys try to understand that natural gas has not been performing well, and if natural gas starts to fall down, these stocks and all of these gas related stocks starts to fall down. This is the same zone where it had shown the impulsive move from, and then it kept on going up. So we even need to take that in fact, and it has not pierced that. It has started to rather build up a base here. I am just waiting for a little retracement here. Okay. And the moment you see this curviness which is trying to curve this out a little, so I'm just expecting a little retracement out here. Once that's done, I'll probably enter somewhere around here in this area, which happens to be 390 to 387, and then I'll be waiting for an impulsive move to take place. Even if it does not, I'm ready to give this a little more time. With that, I just try to explain, or I just try to make you guys understand that in this setup you might have to wait for a week or two as well. This is a good risk to reward ratio setup. If you guys look at the risk, it's narrowed down to 2%. The reward over here is 18%. Even if you guys do not fill that, I expect 14, or maybe even if you guys can change it till you guys can easily expect 7% coming out of that. So it's good that you are risking 2%, and if you are making even 6%, that happens to be a 1:3 ratio. The setup is good. Overall confluences are good over here. I do not see anything negative happening just with this stock, and not the peer players or the same sector players, which is trading in the same sector under the gas stocks. So yeah, I see all of the gas stocks with a huge imbalance, with a good setups forming up. Amongst those, I find IGL to be a good candidate from an impulsive move perspective. Our fourth candidate, is India Cements. I'll try to, explain this move as well. So if you guys look at India Cement, then we need to look at the left side first. You guys see the base was good, and this gave up an impulsive move, and I was able to chase this. It has, came down again and failed out the whole move. Came down to the same zone where it had shown an impulsive move from, and now it is trying to build up a higher high and a higher high by breaking up and consolidating a little more. Good consolidation, good base building, trying to trade around the near the previous zone where it had try to consolidate, and then it fell down. So it is trying to consolidate in the same zone where it had shown up a huge downward impulsive move from. So it's trying to break that out, and it's trying to break that out by taking up small consolidations. I expect a little retracement here. My entries are gonna be tied to 217 to 218. This is the zone where I'll be entering. Risk, you can see 2%, and the reward is 10%. From a risk to reward perspective, it's fine. I still believe from a construction and from an infrastructure view, both of these stocks are correlated, and both of these stocks sectors as well, and their peers are performing quite well. I expect India Cements to throw up maybe in the upcoming weeks, or maybe in this week only. You guys can watch out this and keep this on radar as well. The next stock is RCF. This is not a setup which can maybe help you to enter right tomorrow. You guys will have to wait for a retracement. I am expecting this zone to be taken out by this gap getting filled, and maybe this might come up here to take up or grab some more liquidity. So from an entry perspective, I'll just wait for this path to happen. My first entry, if I see a good reaction from here, I am fine. I'm not going to take any more entries. However, if it falls down here, I might take another entry and just try to average down this a little. However, you guys need to consider this as well. Do not enter with 80 or 70% of a capital here. Just enter with like 30 to 40%, and make sure that you are keeping the rest 60 or 50 for here. Or else, if you guys enter with 80 to 30%, 80 to 70%, and then if you guys average this out 30%, and if this falls, this is not going to be how it works. And at the same time, this is not going to give you a good reward because your risk is going to be quite large. So do not risk that much. Make sure that your entries are, simulated in such a way that you're just maybe infusing 30% here and 70% here. This is how, a decent setup looks like. And once this gives a huge move from here, which it might, I believe so, then you guys can expect a good return out of this. Before that, do not do anything and do not forcefully initiate setups just because I said so or maybe someone else said so. All of my views are just for, references. You guys can maybe ask your own broker or your own personal person who helps you in giving the advisory. So that's there. The last talk is from the same sector which we scouted RCF from, and it happens to be the chemical agricultural sector. And I do believe that again this has to be a play out which can, give up an impulsive move. And at the same time, I'll just turn this red so that you guys understand. I'm waiting for this zone to, get mitigated. Once this zone is mitigated, I'll just take up my entries here, risking 2% here. I'll just draw long position here as well so that you guys have a basic idea of what my risk is going to be. So from a risk perspective, I need to probably take a little more down. Yeah, so you guys see it took liquidity from here and it has taken multiple liquidity from here. I'll just be risking a little, more down so that even if it comes here to grab a little more liquidity, it is not going to hunt my stop loss. So my stop loss is going to be 67 if I enter somewhere around 68 or maybe, this zone of 68.20, and I can just risk, so yeah, the risk over here is fine. You might just take this down a little more wide as well. What if this does not come here and this rather comes here to take liquidity from here? If it comes down here, it's our bad. However, you guys need to make sure that your risk is minimized. And from a reward perspective, I'm easily expecting this zone to get triggered or maybe this. So my first target over here is going to be this, which is going to be 75, and from a reward perspective it's 10% on just risking 2%. So these are my 6 stocks which I've scouted for tomorrow. The last 2 are the stocks which you guys will have to wait for the market to present you an entry for. The rest 4 are somewhat near the entry, but we are still waiting for the retracement to happen so that our entries are safe, the downside is protected, and we can have a better upside, and we can just stay, patient about that. Have some patience when you enter these stocks or any of these stocks, and at the same time try to under the schematic of how the markets work and how your entries should be refined. This is it for today's update, and I'll see you guys in the next video.